Hi, good afternoon, everyone, and welcome to the special episode of Fintech Diary. We have the Fintech Diary. We have been running this show since more than a year now, and every Thursday, every week, we have a fintech innovator, a founder, or a CEO of a fintech world who's doing a lot of innovation in the fintech space. But this time, we decided to bring more than one, specifically three speakers, because the topic is really remarkable and very, very relevant. As all of you know, that on 10th of August, RBI released a framework which is by the working group committee, specifically on the digital lending, and RBI has uh, accepted what the recommendations are given by the working group. Now, the question when the guidelines or the framework which is released on the digital lending came into the picture, major questions are what next for the fintech companies, because RBI has spoken about three important things in those framework. One is about regulated entities, which are the banks and the NBFCs. Second is self-regulatory organizations, and third is lending service providers, which can be tech companies or the fintech companies. As we all know, fintech has actually rejuvenated the whole lending space by using the data analytics and offering a different customer experience. But the point that the RBI has raised is the customer experience and the customer protection is far more important. In fact, the customer safety is far more important, is what the agenda of the RBI is, which is very, very important, no doubt about it. So, we are going to decode here what has happened in the past, what is going to happen post guidelines. And let me tell you, ladies and gentlemen, I have with me three key speakers who will highlight the important topics here, and the in depth will discuss this issue. So my first speaker, ladies and gentlemen, let me introduce to you is Mr. Bhavin Patel, the founder and CEO Lending Club. Bhavin, glad to have you.
Yeah, my pleasure,
My
Amol.
next, thank you, Bhavin. My next speaker is Shilpa Mankar Ahluwalia, partner and head fintech Shardula Merchant and Mangal Das. She will share a legal perspective here. Shilpa, glad to have you.
Thanks, Amol. Great to be here.
Thank you. And my next speaker is Harshvardhan Lunia, co-founder and CEO Lending Cart. Harsh, glad to have you.
Same here, Amol. Glad to be here.
Thank you, thank you. It's really nice to have all of you here, and let's start with understanding the first basic question, or let me take your reactions on a very very important topic today. And the first question I think I will ask all of you, and I will start with you, Bhavin, is how are you as a fintech company reacting to RBI's guidelines on the digital lending? What is your first impression? Because I'm sure now after maybe 10 days, you must have, adopted what RBI has said. You must have consumed what the RBI statement is, and you must have, have your perspective by now.
Yes, absolutely right, Amol. I would say when we studied the draft working committee report, which was published later last year, so I think a lot of things were already clear, and we were slowly, gradually moving towards those operational compliances and all. So we don't see too many challenges we are going to face as far as these final guidelines are concerned. However, if you are talking about the first-hand reaction to it, I would say my reaction would be same when we got P2P regulations in place in October 2017, that any regulations are good for countries like us because that gives people more confidence. Second, that promotes a lot of best practices in the industry, and we get some guidelines. Okay, this should be the pathway, the relationship between entities should be shaped up. So I think last 2 years there were so many discussions, who can do what, how, what will be right, what will be wrong, right? So I think with this, everything is clear, whether you find it good, bad, ugly, difficult, easy, but this is what you have to follow.
Right.
And I think that makes a lot of sense with so many technology companies coming into this landscape.
Sure, Bhavin, meaningful. Harsh, your views, please. How are you reading the guidelines?
Yeah, Amol, I think thanks a lot. So, Amol, basically, I think when the guidelines came out, it was not much of a surprise. I think when the working group was made early last year, and when the recommendations came out, we knew that this was happening. A lot of this was happening. Further, Bhavin, this is quite progressive guidelines in the sense that we all know that financial inclusion is quite required, right, for the country overall, and financial inclusion is required for making for solving the problem of either we say missing middle or bottom of the pyramid. So I think this was required to create a framework in the country where the players involved in financial inclusion and digitization of finance and everything know what they have to do, how to do. Similarly, I think it is a progressive step for consumer protection and data security as well. Currently, I think there is a thin line between who's collecting data, what data is getting collected,
Correct.
who's using it in what form and format, right? We have to RBI has been taking steps, right? If you look at account aggregator, that was a major step in realizing that the banking data of the customer is the ownership of customer itself. We should be able to share it data. It's not the banks or larger institutions prerogative, right? So those kind of instances are coming up more. I think we were participant of while this was getting done and everything, so it was not much of a surprise. I think it's very much required. Like Bhavin said, right? Anything that comes up, any rules or regulations that come up, they pinch in the beginning, but then I think they all help us to stay structured, sane, and in within frameworks. So I think this is quite required and is quite progressive.
Okay, noted your point. So Shilpa, Harsh, and Bhavin, you heard both of them, and they may have a different perspective, but I'm so sure that you will have a completely third-party perspective because you are the advisor to the fintechs, and you must be advising to REs as well as the tech companies. So, what is it that you are advising right now after the guidelines came into the picture to the fintech clients? Are you asking them to go slow? Are you asking them to tick all the boxes, or what is it that you are actually asking them?
So Amol, very relevant question because that's exactly what we've been doing for the last 10 days. I think two big takeaways from this framework is one, there's a roadmap for regulation, and I think both Bhavin and Harsh said, nothing unexpected. We sort of knew what direction this was headed in, but there still is, I think, a lot of clarity needed on some of the detail and how these guidelines will be operationalized. But I think, one big takeaway is that there's a clear roadmap for regulation. A lot of the uncertainty has gone away. The second, I think, big thing to note is, and a lot of you here may know this, but a lot of digital lending in India has been modeled on the partnership model, where you have the regulated entities, and Amol, you mentioned this initially, right? The banks and the NBFCs who provide the capital partner with fintech platforms who not only provide the technology but also front a lot of the product innovation, the customer sort of interface, and do credit analytics to create, distribution credit channels. I think the regulatory framework is going to alter the dynamic a little bit in terms of the roles that the regulated entities play vis-a-vis the roles that the fintech platforms play. And the RBI has made it quite clear that they want the banks and NBFCs, which are the licensed entities, to be the dominant players, to take the lead role in digital lending. And I'll tell you what I mean. A couple of things. One is all sort of primary customer interface has to be now done by the regulated entity. So whether it's the documentation that has to flow from the licensed entity to the borrower, whether it's the key terms of the loan product, whether it's sort of managing the customer grievance process, all of that now has to be controlled by the licensed entity, and they must supervise the platforms, the tech platforms that they partner with. Another key theme, and Harsh, I think this is something you mentioned, is data. Data really forms a core part of this entire regulatory framework. And I think two big points there. One is data control. Borrowers must have control over all data. That's not only control over how it's collected, but also the ability to alter, terms of consent, who that data is shared with. And the second is, the data underlying credit analytics, that must be transparent. So banks and NBFCs must actually be able to demonstrate that if they're using AI or other sort of tools and analyzing data, that data is being analyzed in a non-arbitrary and in a fair, in a fair process. So data is definitely a central theme of the regulation in terms of protecting consumer data.
Hmm. Quite realistic and meaningful thoughts, Shilpa. Thanks for adding that. Let me come back to you a little later on the data part. But let me come back to you, Bhavin. And so nobody will disagree with the fact that digital lenders, specifically the fintechs, have kind of boosted the whole traditional banks' legacy system in terms of lending. The disbursable could not have come up without fintech innovation. The most of the PSU banks are also talking about 59 minutes or 59 seconds of loan could not have happened with the kind of data revolution that took place. But the question is, all the fintechs are collecting so much data that most of the fintechs know that where I party on the Friday in the evening or where I shop. Now the question is, and on the basis of that, they're customizing the loans for it. So the point is, I have never given that data to them. So now considering data is a very integral part, and RBI is looking at protection more than more than the disbursal or more than the speed of the loan. So, Bhavin, what kind of changes do you think the fintechs will have to make in their daily operations going ahead? Because now we understand that the regulator is watching us carefully and vigilantly.
So Amol, I'll give you answer in little different way. So a lot of time, what happens if we go in the market to, let's say, purchase couple of vegetables, but because some other vegetables are available at lesser cost, we purchase vegetable worth of 15-20 days stock, right? Now, you wanted only two vegetables, but you purchased another 8-10 because they were less costly or somebody was giving you free of cost. So I think here also similar thing could have happened with some of the companies, because of which all these trigger points happened and a working group committee was formulated. So when things are available easily, people start collecting it. The biggest question is it needed or not? Right? What sort of data is needed to underwrite a loan? Uh, data is available in today's world across the platforms. Everybody will be ready to share it with you or sell with you, etc. But whether it is needed or not, I think RBI's recommendation will help people streamline the thought process first. So, for example, since I started, maybe Harsh can also share his experience. Since 2015, I have met so many companies who claims that we collect social media data and try to give you some kind of analytics that whether this person will default or not. Frankly speaking, I haven't seen even single solution which can surely show you some confidence in that data points. Okay, we have done this analysis and this is the answer. We could not do that. Not sure about other companies, but I have not seen. Now, question is, if you are trying to dig out this data, whether it is relevant or not, my always question on any kind of data collection is, do we think this is going to be correlated with customer behavior default pattern, or is it going to make their life easier? If it is going to be yes, then only probably we should think of collecting those data points. So I think a lot of, data points which were being collected, which are not adding value in the assessment process, probably those should be stricken down, or that's what the RBI's thought process is. I think if we look at the spirit, this is what they say. If something is important and that is how you are adding value to the customer, why customer would also say no to it? But if it is not important and still you want to say, no, no, this is required, otherwise this will happen, otherwise that will happen, that's a thought process which now being infused in all the fintechs mind, all the digital companies like us mind. And I would not say that everybody was doing or everybody was not doing. Some or the other way, different company would have been doing it. But this gives one single straight line thought process that now start thinking about it and see what you should be taking and what you should not be.
Hmm. Okay, sure. Noted your point. So, Harsh, I will also take your views on the same question in terms of the changes that will happen post regulations that have come up.
Sure, Amal. So I think Bhavin covered quite a few relevant points, Amal, right? Like in country, we are seeing the digital age coming off in this decade, right? Last decade, almost some years in last decade, and now this decade is going to be digital age. In terms of data, Bhavin, there are tons and tons of data available, right? Like Bhavin also alluded to, there are multiple platforms. You could have delivery data or e-commerce data, payments data, and thousands of them. So what's happening is, at least for lending, right? Purposes, you have to decide. The company has to decide and figure out what actually is useful and not useful. But we've also realized across our journey, Amol, that a lot of data that gets shared in name of data, everything that's not that much relevant in identifying actually the intention of the borrower, capability of the borrower to pay, right? But I think currently what's happening, Amol, is everybody's collecting the data, and some data is not getting utilized anywhere. But some data is getting misused as well. Like we've all seen the contact list of people, SMS is getting read and stuff like that, which is getting misused by people. I think the focus of regulator is to start making people think, right, that the data that you're collecting from the consumer is consumer's property, right, and you cannot use and misuse it as you want. If you take approvals and sanctions overall from the consumer for using it, and then one, you have to use it in that form and format only, and second, you are, like Shilpa also said, it has to be auditable, it has to be, yeah, a responsible use of that as well. I think the clear idea is RBI clearly wants to segregate people who are, and like Shilpa again said, right, NBFCs and banks they want to give more responsibility to them, who they feel are capable of doing lending business and working in this space, and continue to regulate them. For the data perspective also, they want them, they are segregating into non-REs and REs, right, or LSPs and such stuff, where they are clearly saying that if somebody is not going to utilize that data just for communication and contact, then you just take email ID and mobile phone numbers of those guys. You don't need to store rest of the data for those guys, right? So I think we are now getting into a realm of business where misuse of data will not be allowed, and that's what regulator is making very clear through these guidelines.
Okay, sure. Noted your point. So Shilpa, going ahead, since RBI will not directly regulate the fintechs or the LSPs, because they already have regulated entities to watch out for. So do you think going ahead now, REs, or which are specifically banks or any financial institutions which comes under the RBI, will go very, very strong while doing any partnership or collaboration with the fintechs, because they do not want ultimately regulator to blame them or regulator to charge them with some penalties if something goes wrong with the fintech. So do you think those partnerships will be very vigilant going ahead? And before you answer, just 1 second, Shilpa. So most of the people, those who are watching this show, I would request you, if you have specific questions about the digital lending or the regulations that has RBI posted very recently, if you have any questions, please share it with us. If you have any questions specifically to Shilpa, Harsh, and Bhavin, please direct to them also. I will try my best to take these questions during this course of conversation. Yeah, Shilpa, please go ahead.
So, Amol, I think you've touched upon a very critical sort of question, is, how will the relationship between the bank and the NBFC partners, which are the licensed entities, and the fintech platforms change? And I think, what has happened so far is the fintech platforms have not really been technology partners, but they've actually played a very important role in the product innovation and the credit analytics as well. And I think the RBI now clearly wants the banks to take on a more supervisory role when it comes to dealing with their partnership. So yes, there will be higher sort of costs of supervision, costs of operation, because the RBI has made it quite clear that a bank or an NBFC, before they partner with the platform, must do an audit, must do a diligence, must make sure that the platform is able to handle data securely, has adequate customer consent architecture in place, has good governance, has the ability to deal with data. And I think Bhavin and Harsh both, raised something quite important around data, which is need to know. A fintech platform can only now access data that is needed in connection with that credit product. And I think three limiting principles are what, why, and where. What data is being collected? The borrower must know what data is being collected, why is it being collected, what is it going to be used for, and where is it being stored, who is it being shared with. So these three limiting principles, I think, will govern a lot of the relationship, and the regulated entities must make sure that the platforms comply with these when interacting with borrowers. I'm going to spend just a minute talking about one other sort of product, I think, which will undergo a lot of change, which is the guarantee product, or the first loss default
FLDG.
FLDG. Absolutely, yes. So a lot of the partnerships are effectively based on the model where, because the fintech platform does a lot of the sourcing and the loan origination and the credit underwriting, they give a guarantee for some part of the portfolio. So if they source 100 loans, the first 10% of default or 20 or 30%, they will give a guarantee essentially to stand behind their credit analytics. And that opens up the credit access for the bank to lend to that consumer segment. Now, the RBI's real concern with this model, which is common in the digital lending sector in India, is that a lot of the risk is shifted onto the fintech's balance sheet, which is an unlicensed entity. And I think the regulatory concern there is it'll lead to systemic risk, and you'll have exposure which the RBI doesn't have direct control over. So what they've said right now is they're not banning the model, which I think is a very good sign, because it's a recognition of the fact that the model opens up avenues of credit access and opens up consumer segments to credit that may not have otherwise have been able to borrow. But to address the risk point, I think the RBI is probably going to come around with detailed guidelines which emphasize that even when you're providing such guarantees, it has to be done by a regulated entity, not just it could be an NBFC or an entity regulated by any other financial services regulator. Which effectively, I think, two big takeaways for the industry is one. I think groups that are doing digital lending as a long-term strategy, eventually you will need to have an NBFC as part of that ecosystem. And the second is it's probably going to become a more sort of capital intensive activity, because to the extent you are underwriting credit risk, there will have to be capital allocated to that. So I think, yes, more regulation, and the banks and NBFCs will definitely have to take on a supervisory role, and I think it will require sort of more capital going forward.
So I will just
Sure.
add on to what Shilpa
Sure.
said is,
Sure.
see, the biggest positive of this whole guidelines is that there is a coexistence required, and that's what RBI accepts. That only one entity will not be able to work. The fintechs are important part of this complete ecosystem, and if you are looking at India in 2030, then probably these are going to be one of the prominent part of the lending ecosystem, and that's the biggest positive part. Now, remaining things are more operational, and people will figure out how to manage those parts.
Hmm. Okay. Again, meaningful thoughts here. Noted your points. Very, very valid points, Shilpa and Bhavin. So if we, quickly look at what went wrong, in fact, you see why RBI has been going against or maybe going strong on digital lending, though we agree that they are not in mood of banning digital lending completely, but they want to make it far more transparent. They recently came with the, framework specifically on the BNPL as well, where they allowed, they clearly said that non-banks can't load credit lines on the the prepaid payment cards or something like that. I think that was also a very valid point. And now also they are looking at streamlining the whole process of digital lending. So which means that RBI is very consistently trying to look at this place and space. So Bhavin, my question is now, considering FLDG is there, considering DGIT which they have suggested and all, if look at the maybe broad guidelines of the prepaid credit card load, which they said it earlier, and now the digital lending, what kind of clarity that you as a fintech company looking from RBI, is there anything that you as a fintech or maybe industry don't understand and you think that you do not know how to get this done? And maybe you have that point, maybe you as an industry or you as a company, you must have spoken to a lot of people. So are there any 2-3 bullet points that you want to share here?
So I think there are a couple of exceptions which RBI has mentioned in the guideline, but those are not clear. That specific exception can be given. One part is mentioned in the payment side, that if money has to be disbursed directly in the borrower's bank account, some exceptions can be given. Now, we all know that in India, BNPL has been a traditional product, and also in the secured lending side, though we as a company is not into secured lending, but if we talk about the overall lending industry, there are secure lending and where the payment goes directly into vendor's account or someone who is providing services or the goods. So our take is these exceptions can be taken. Probably you may take it to the regulator, but if those can be clarified, could be helpful. So we have our own take. However, more clarity can be provided. Second, on the FLDG part. So again, I'll clarify the stand of we as a company that we don't take FLDG or we don't work on that model, because long back we realized that it has to be a collaborative effort of two partners. One partner cannot dominate the relationship by saying that, okay, I'm giving you FLDG, this is how we'll have to do. So it's always a collaborative effort. So I think by removing the FLDG from the equation, it will be more collaborative relationship. However, there could be certain areas where it might be required. So probably one thing which fintechs or companies like us will also have in mind is, if something arises or some exception is there, where to reach out, whom to be approached, which
Exactly.
part of RBI, whether that will be addressed by the Department of Supervision, whom we report to, or it will be by the policy, or anybody else, or the new fintech department which is created. So I think if this couple of things can be explained or clarified, could make this implementation more easier for both the partners, the fintech as well as the regulated entity.
I think very, very valid points and fair points. In fact, you need to know where is the window which you can knock when you need to have more
Right.
and clear information. Harsh, I would also like you to add here if you have any, clarifications required from RBI or anything that you expect, RBI to clear, because I'm sure you are also part of DLAI, and I'm sure through DLAI you must be talking to RBI. So, is there anything that you want to share here in terms of the clarity that you're looking for?
No, I think Amal, Bhavin covered most of the points, right? See, I think from our perspective, I clearly feel that Shilpa also shared this fact earlier, that RBI is worried that a lot of fintechs, right, were participating in the lending business overall and were not regulated by them, right? So finally, all of us as fintechs or new age NBFCs or banks are distributing depositors' money, right? That the largest of the banks hold interest and safety, right, overall for those guys. So the idea clearly was that anybody who basically engages in the lending business, right, has to be indirectly, directly either regulated by them or has to be aware of the risk involved in the ecosystem, right? Aware of the risk involved, and I think it should. I think financial services is lending is as such a simple game of giving money and collecting it back, right? The problem is the transaction lasts long. The transaction lasts 36 months, 48 months, or maybe 10, 20 years as well. And that's where the risks arise in these kind of transactions. So I think the idea clearly was that they wanted to set a framework for regulated and non-regulated players, and maybe set up accountability and responsibilities for the same set of players. I think that is laying down. Like Bhavin said, I think there are few areas where they can give out more clarifications, right? I think we have had few guidelines, like you said, that they came out with PPI guidelines, they've come out with outsourcing guidelines, they've come out with co-lending guidelines, and now this is the digital lending guidelines, right? So there are frameworks and regulations. I think there are few areas that overlap among few of them. I think that kind of guidance on which will apply to which and those kind of stuff will be very, very helpful. But I think I think RBI, from RBI perspective as well, they have clearly laid out a framework which they want to implement in the ecosystem. I think now more notifications and guidance will come from them, which will solve for the ecosystem model.
Okay. Shilpa, you also want to add here? I took this question partly, but after listening to Bhavin and Harsh, you want to quickly add something in terms of clarity? Because
No,
lawyers are the
absolutely.
one who looks for the clarity all the time.
So Amol, if you get me started, I have a long list of areas where we need more clarity, but maybe I'll just highlight sort of, two or three big issues where I think more clarity is needed, and I think it will come. So again, like Harsh also mentioned, this is effectively a roadmap, and there will be detailed guidelines that will follow. Bhavin did mention, and Amol, you mentioned as well, the BNPL, which is the buy now, pay later model, effectively where if I want to buy a phone or a consumer product online, I can buy it now, but I get credit. And the way the payment flow works at the back end is that the credit or the loan is dispersed directly from the bank or the NBFC to the merchant. Now, what the new framework seems to suggest is all fund flow can only be between regulated entity and the borrower directly. So whether it's disbursement, whether it's repayment, it's only a bilateral sort of movement between the borrower and the bank or the NBFC. Now, effectively, that will have serious implications for the BNPL model. But again, the RBI has said certain, exceptions will be considered. So I think one big question is, what are these exceptions? Will they allow the BNPL model to continue or not? I think that's one big question. The second is on the FLDG piece that I spoke of, earlier, and you did as well, which is where the fintech platform guarantees a part of the loan exposure. Again, the RBI has not banned this. I think at one point there were question marks on whether they would ban the model entirely. They haven't banned it. What they've said is we are thinking through how this needs to be regulated. They will come up with detailed guidelines, but in the interim, they have a framework which is for securitization transactions. They've said these will apply, and I think a lot of questions come out of that is which pieces of that regulation will apply to the FLDG model. Is one big question is, does it mean that only NBFCs can offer these kind of credit enhancements, and what will the operational detail look like? So I think a lot of clarity on the future of FLDG is expected. I think two other areas where we can expect more clarity from the RBI and even the government, because the framework has three parts. Part one is recommendations that come into effect immediately. Part two is recommendations that the RBI has accepted in principle but is thinking through the detail, and part three is points for the government to consider. So two areas I think where we can expect more clarity is, one is how will the SRO model, there's clearly a recommendation for a self-regulatory organization that the industry will build on and evolve. And I think the expectation is the SRO will form a set of guidelines and best practices for the industry to consider. So I think we can see and that maybe will come from the industry in terms of how that evolves. I think the second piece is there has been discussion around the government setting up a nodal agency to regulate and vet the apps before they're available for public distribution or public access. And I think one question is, how does this fit into the regulatory framework? Because there clearly is now going to be much more supervision of fintech apps by the banks and NBFCs. So I think a question is, do we really need a sort of central agency that will act as a nodal agency to vet and verify apps? Questions around will this lead to additional bottlenecks, etc., comes up. So I think that's one area where we can expect some more discussion.
Okay. Let's to have more discussions on that front for sure. So let me shoot one more question, and I will then look back where I have received some questions. Obviously, there are a couple of comments from various viewers. But one question that comes to my mind specifically after these guidelines and the kind of work that the fintechs will do, and the points that Shilpa has raised right now is, and Bhavin and Harsh, I would like you to reply to this. The simple question that I have now is, considering that we'll have to look at the data far more diligently, we'll have to look at the privacy, we'll have to look at the customers and all these points which RBI has said. Maybe you will have to hire a dedicated grievance officer or someone specifically to tick all these boxes. So considering all this, Bhavin and Harsh, and maybe Bhavin, you can start. Will the compliance cost go up? Will that be an additional burden on a fintech companies? Because ultimately fintech started with a big innovation, they created a lot of stuff and all, but now when gradually they're falling into compliance, will the compliance cost go up? Will it be a little difficult for you to follow all these tick marks and have some impact on the business going ahead?
Let me tell you our clear stand. So we don't think that is going to be the case, and that's the biggest advantage of the technology-driven businesses. That once you set the process, expansion of that process is not difficult. If we were operating into physical channel, probably it would have been prolonged issue because we have to reach out to all the branches, dedicatedly teach people, we have to educate them, and then ensure that they are following it rightly. Because we are into technology-driven business, it is not going to be a long-term challenge. Right now, the two questions which we have to answer, one is ticking the box which are required to be followed, and second, which is not part of the regulation, but to ask to company itself, that what kind of data we want to collect, how we want to proceed with those data points, and how do we want to pass on the ownership of data to the customer. Now, these are one-time questions which we need to answer and probably set the process. Now, as far as we are concerned, or P2P companies are concerned, or for that matter, even NBFC. I mean, Harsh would be able to comment more on this. But for NBFC also, you have to have your compliance officers in place, and those should be displayable to customers so they know whom to reach out in case they are not getting any response from the regular customer support. So there is a hierarchy which is very clearly prescribed, and at the top there is RBI where they can reach out to ombudsman officer and raise their query. So I think these processes were already set. It's little a kind of reminder to the people that, see guys, these processes are set. Some of you are following, some of you are not following. Ensure all of you guys are following it up. So it's mixed, and it is not going to create a lot of burden in terms of compliance management. It's just a matter of some months or the process to be initiated where you will have to invest time, and I think it's worth it if our customers are benefiting out of that, and if overall ecosystem is benefiting out of it in terms of best practices or what is good, what is right for the customers and what is wrong for the customers. I think it is worth taking it up.
Mhm. Sure, Bhavin. Harsh, do you want to add?
Yeah, Amol, I think I agree with Bhavin, right? I think as a regulated entity, Bhavin, Amol, we almost had most of these things, right? Customer redressal officer or customer complaint.
Hmm.
We always had audit. We had always compliance procedures, right? RBI regularly takes the details of these customer complaints and how we are solving, what is the TAT and everything. So that's already been there for us as a regulated entity. Amol, what's happening is like the question is that will it increase the cost of maintaining, managing the customer or cost of operations? I think all of us will have to understand that these are the cost of building up the ecosystem, right? And building up the ecosystem in the rightful form and format. If we don't basically invest in these things right now, right, then the scale will not happen. I think customer or consumer is one of the very critical part of our ecosystem, right? Until he feels safe with his data, till he feels safe transacting with us, till he feels safe about that he'll not be cheated or stuff like that, it will not solve, right? I think so. RBI has laid down these guidelines and thought process, and like Bhavin said, it may be a reminder to all of us. Maybe most of us are doing it. If some of us are not doing it, then we need to go ahead and do it overall, right? But I think these are the costs for scalability and for build up of the ecosystem, Amol, which are extremely
Hmm.
needed.
Sure. Noted your points, Harsh. Shilpa, since you mentioned about data some time back, and there are a lot of what against ideologies and comments about data. It's data is a new oil, data is a world war, data is the next business and everything. But unfortunately, we still do not have rules specifically about the privacy, about the consent, about the security of the data or something like that. There are so many minds working on that, and there are a lot of opposition as well. Considering that there are no challenges, considering that there are so many challenges with data itself, what is it that maybe the legal approach for the fintech companies or any startups? Because most of these companies are based on data, they are collecting data and maybe offering a customized solution by using AI and crafting products for him. Going ahead, to be legally very sure, how should that whole consent mechanism work going ahead? If you could offer some legal perspective here, I'm sure it will be helpful for the fintechs in terms of adding or tweaking their business model considering data privacy.
Amol, I think you've raised a very, very important question. And I think data is really lies at the heart of fintech, right? I mean, one of the things that fintech does best is analyze data to develop, sort of customized solutions and use alternative data sets to really, create products and also to develop solutions that meet specific needs of narrow consumer segments. So data does play a central role in that entire distribution process. Now, yes, you're absolutely right. We currently don't have an overarching data privacy regulation, and I think once we have that, regulators like the RBI will probably feel less pressure to have to directly come up with regulations for each ecosystem in terms of how data is treated within that ecosystem. And I think that's what's prompting this set of data rules as well, because today we don't have an overarching regulation. So the regulator needs to come up with a framework for the digital lending ecosystem. And I think an important sort of policy question really is the regulator ever going to get comfortable with fintechs accessing data? Currently, the mindset has been the RBI is comfortable with licensed entities that they have direct supervisory control over in handling data and accessing data, but they are not so comfortable with fintech platforms handling data. And I think a key sort of my advice to a lot of fintech platforms we work with is, even though it may not be mandated, I think it's critical to invest in data governance, in a consent architecture which meets global standards. So the approach shouldn't just be let's meet the baseline requirement, but let's truly generate a consent architecture that addresses not just data protection and security, but also privacy concerns. So for example, if I'm interacting on a platform, am I being made aware of exactly what data points are being collected? Why are they being collected? How are they being processed? Where are they being stored? Who are they being shared with? And give me as a consumer, and I think both Bhavin and Harsh mentioned this, like data is ultimately my property. So do I have control over my property? I should be able to at any point step in and say, I want to sort of cut off consent for 1, 2, 3, and I can, I'm allowing consent to continue for 4, 5, 6. So give me as a consumer complete control over my data. And I think if the fintech industry is able to demonstrate to the regulator that yes, we are able to handle data responsibly, we are able to sort of store it safely, I think there will be a policy shift, or hopefully there could be a policy shift where the regulator actually gets comfortable with giving fintech more access to consumer data, to be able to let them do what they do best.
Sure. Thanks again, Shilpa, for that meaningful thoughts. So, Shilpa, Harsh, and Bhavin, let me take a couple of questions which I think the viewers have raised. So, this question is, and maybe either Bhavin or maybe Harsh, you can reply to this question is, what is the most negative impact of RBI framework will be on the fintechs? We partly discussed about how are you guys reading about it, how you are reading the regulations and all, but if there is anything specifically on the negative impact that you see, Harsh, Bhavin, anyone of you want to reply?
Yeah, Amol, I think one negative impact, or maybe you cannot call it negative as such, but one long-term impact will be like Shilpa said that, right? It will be responsibility now of regulated entities, right, to ensure that the partners that they are engaging with overall, right, whether it's LSPs or other intermediaries across the process of lending, or if they are using it, it will be the responsibility of regulated entity to ensure that they are following the norms, right? Uh, so I think that's not gonna be that easy, because all of us work with tons and tons of partners, right? I think we will do regular compliance checks and audits of those partners, but ensuring that all across the journey, all across the transactions and years of work that we do together, how will you ensure that those partners are doing it properly, right? So that is one guideline or framework we will look forward to overall. I think some set standards for that, some set frameworks that people, either it could be a qualifying criteria that if you meet this, then you qualify and you can work with the partners, or a regular check mechanism, right? Where either a CA institute is alluded to that, or some framework is created where third party can verify and help the ecosystem would be very helpful.
Sure. Thanks, Harsh. There is another question: how do you see banks, NBFCs, and fintechs working together henceforth, as in specifically after the regulations? Bhavin, Shilpa, do you want to take that? Any one of you?
Shilpa?
Sure. So I think one area where the entire ecosystem can come together is in the space of the SRO, the self-regulatory organization, where the industry can, build standards for whether it's a fair practice code, whether it's data governance standards, whether it's sort of consumer dealing with consumer standards. I think that's one area clearly where the industry can come together to create, a self-regulatory sort of ecosystem. which I think will help in regulating the entire sector and build consumer trust.
Okay. So since we discussed a lot about data, there was one more point in that guidelines, and I would like to, any one of you can, maybe ask, and the point was specifically about, do you think that it would perhaps make sense? Uh, in fact, my question is also, I'm asking this question because somebody from SBI said most of the big banks or the fintechs have a lot of data, but they don't know what to do with it. So the point is it good idea? I think this point is there in that notification that maybe the fintechs or whoever is collecting a data is restricted to only three features, on the smartphones. For example, that fintechs are not allowed to use. I mean, generally, fintechs are looking for all the approvals and consents from the person while downloading the app. But what this regulation means is, or what this point means is specifically that it will not be allowed to restrict, it will not be allowed to access all the information in the smartphone. And it will allow, for example, in the case of Indonesia, the lending platforms may be allowed to access just the camera, microphone, and location, which is very important, and not all the contacts and all the information. Do you think something like this can be a good feature while putting some compliance measures and restricting fintechs? Any one of you, maybe Shilpa, Harsh, Bhavin?
So I think RBI has already spoken around this point, and
Yes, yes.
some clarity is already given that this cannot be collected. What can be collected is left little open-ended. Now, see, we'll have to understand the nuances of what could be the long-term impact. In short term, probably this will resolve the problem, and people will start restricting themselves to collect only this one, two, or three information. But if if we look at the overall population of India, if we look at RBI's financial inclusion target and how many customers we have to serve over next 1 decade, if you want to bring people under the lending ecosystem, then probably you'll have to promote some kind of innovation. If you find something which is extremely impacting on the ecosystem, probably you take one step and say, okay, don't do this. But giving a blanket ban that, okay, you can do one, two, three, then probably it's more of a, just cutting down the thought process itself. That, okay, now you have only these three access, think about
Right.
how we can underwrite things. If that was the case 10 years back, then probably I and Harsh would not be sitting here as well. If that was the situation. So probably we should not take certain extreme or harsh actions which will have a much longer term impact. So people should be given some kind of direction and should be explained the spirit that this is what we need to avoid, and then see how things shape up. Otherwise, how will new models come up in the market? How people will be given new to credit customer will not be given loan. If we continue 10, 15 years back model, people will always mark negative pin codes. Now, companies like us never even think about that kind of policy. Somebody would think some innovation around negative pin codes as well, but you can't restrict as a regulator, and that's how innovation will should be promoted.
So if I can just add to that,
Sure.
Amol, Bhavin, I think raised an important point, and that's a critical question actually, is how do you draw that line between what data can be collected, what is need to know? There's no clarity around what is need to know. And I think, a better approach to regulating it is, instead of having a list and saying, you can collect these 10 data points and nothing else, is to instead have a guiding principle in terms of, is this data needed? And this is what Bhavin was talking about, right? Is this data needed to actually understand the credit profile of the consumer? Will it help the consumer? Will it actually open up, channels of credit for the consumer? Will it help reduce borrowing costs for the consumer? So, is that data needed for that credit making decision? If the answer to that is yes, I think yes, the data should be collected. But if that data is being collected to use it, as a
Right.
harassment tool for recovery, so we are trying to get contacts
Exactly.
or photographs which could be misused, then clearly the answer is no.
True. I think again, very realistic thoughts from all of you. Let me take one question, with all of you, and maybe we can stop there. There are a lot of comments, actually, not straightforward questions. I will avoid them. But the one last question I have to all of you is, obviously, again, no doubt about the innovation that the fintechs have created. Otherwise, like Bhavin said, Harsh, and you would not have been here. Obviously, most of the entrepreneurs and SMEs would not have obtained the loans that they are obtaining today because of the fintech innovation. But considering now, the regulators are vigilant, considering there has to be a data strategy, can we say we have reached to a level where the fintechs used to say, oh, 500 crore books I'm building, 1,000 crore books I'm building, I'm going to raise maybe 4,000 crores, and the race towards unicorn and raising funds will go a little slow? Will the higher targets of disbursing loans will go slow? Because the affair which was going on between the boyfriend and girlfriend is over, and now the marriage has been done, right? The marriage has started because the regulator is very active. So going ahead, the affair is over and marriage has started. Are we in that situation now? Bhavin, can we start with you?
Amol, that would be the situation all the time. See, I have been into NBFC sector for last 14, 15 years. Harsh is also there for a long time, and Shilpa has also spent so many years. So see, it's always the similar situation when any new thing comes in. So the first reaction of anyone to cultural change or operational change is always like, why we need to do this? छोड़ो नहीं करते क्यों करना चाहिए? That all question comes in mind, but that's always good for the long-term ecosystem. The similar question I was asked around 2-3 months back also when that PPI thing had happened, whether this will impact on the valuations of the company, etc. I said, boss, we are not into that business. But if you want to have some general scenario, then this will have impact over some months till the time the right set of processes are set, etc. Again, answer to your question is this will be a short-term impact if at all people are thinking this as a negative point. I do not see that as a negative point at all. It is very good positive step by the regulator that okay, we recognize there is a need of regulated entity, there is a need of LSP, and let's bring them together. इनकी शादी करा देते हैं ताकि दोनों साथ में जी सके, and these are the rules कि शादी के बाद ऐसे रहना है. So I think that thought process is very novel, and see, at least our regulator is putting so much of efforts in bringing such kind of things on table. Right, so we should appreciate that. It's not that कि marriage हो गया तो दुखी होने वाला है. Marriage के बाद अच्छी life भी तो होती है, sir. So
No, sure, Bhavin. No, really, really interesting. Harsh?
Amol, basically from our perspective, no, हमारा तो arranged marriage हुआ था, right? We are a regulated entity from the beginning, so we had consent of both sides of family, parents, everybody happened and stuff. I think when you're alluding to the love and affair, it basically towards non-regulated entity, right?
Yes.
Which is the modern day thing. But it's a balance, like Bhavin said, right? You cannot say one is good, one is bad overall, right? But I think the important is, and now we are picking up the institution of marriage, right? The important is to have frameworks over there, and the frameworks have been basically created by society over there. Not necessarily everything works in either other direction, right? Arranged marriages can go bad, and love marriages can also go very good and bad. So it's both the ways. I think the requirement is of frameworks, right? For it to be long lasting and perpetual. And I think again from our perspective we realize that it's a continuous effort, right? Continuous effort that will have to be put across the years of relationship, right? So if you're building in financial services, it's not 1 year, 2 year, 5 year game or a 10-year game, Amol. It's a long drawn game where, like I said, the relationship with the borrower is long, the relationship with stakeholders is long, relationship with depositors, if you're putting across depositors money, it's all long. So frameworks will be required. I think Amol, what we were seeing also across the race to the unicorn or the funding that's going on, it was not just the fintech space, or it was not just the financial services space. It goes across the ecosystem, right? So when you see funding happening, it's happening across multiple sectors, multiple areas, and I think it's a very separate VC ecosystem or PE ecosystem that also has their own growth cycles, learning cycles, and evaluation cycles. I think both the cycles got matched up. One learning across my journey has been, Amol, in financial services, it's not a journey to a particular 5-10,000 crore. because in 5,000 crore also, if you don't lend the last 500 crores properly, you can still have a losing business. Similarly, in a 36-month loan, if you don't collect the last 6 EMIs also properly, right, which actually make money for us, you can still be in a losing business. So it's all about framework, Amol, and it will continue to evolve as we work on fintechs in this decade.
Sure, meaningful. Shilpa?
I think I just like like to add that I think the regulator has clearly laid the strong foundation for a marriage, so hopefully it will last. And I think the current approach is clearly they're not licensing the fintech platforms. They're going to follow the model where the regulated entities will supervise. So will supervise the functioning of the platforms to make sure that it's a safe ecosystem for all stakeholders. So fingers crossed. Hopefully this marriage will last.
Oh, sure. In fact, it should last, no doubt about it, and I'm sure it will last, considering all the precautions if we take. And thank you so much, Harsh. Thank you so much, Bhavin, and thank you so much, Shilpa, for sharing meaningful insights here on a very relevant and a trending topic these days. Thank you so much for your time. So that's a wrap, ladies and gentlemen. Click on the FinTech Diary tab to view our previous episodes as well. And if you like it, please share it on the social media platforms and wherever you want. Thank you so much for tuning into FinTech Diary's live session today. Thank you so much.
Thank you, guys.
Thank you.
Thank you, everyone.